welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, the markets have had yet another positive week so far. On Wednesday, we did see the benchmark Nifty and the mid-cap indices hit record closing highs led by metals and the energy stocks. The truncated week, however, has also seen the Nifty gain over 1% in the first three sessions alone, and the index now is just about 250 points away from the 23,000 mark. Will the Nifty be able to scale another milestone today? We'll find out in our conversation with the top market experts over the next 90 minutes odd. Good morning to all our viewers and good morning to you, Shail.
Good morning to our viewers. It's a very warm Friday morning in Delhi. And let's see how the markets function. I'm expecting a very quiet day on the Nifty for two reasons. One, we are ahead of the weekend and we have a truncated week ahead. Wednesday, April 17th is a holiday for the markets. So the action will be limited as far as the indices are concerned, but the broader markets will be in thick action. TCS will record its fourth quarter earnings today, as also the listing of Bharti Hexacom, which will be watched in great detail. I'm just wondering if Mr. Deepan Mehta has joined us. He's the director at Elixir Equities. We'll just in a moment reach out to him. But the mood and the tenor on the market is slightly muted for various reasons. One is the US 10-year yield, which is back up again at November highs, as also the dollar index, which just might put a spanner in the wheels as far as the wonderful rally in commodities is seen. But overall, the theme is fairly bright and shining as far as markets are concerned. 22,750 is a very strong support for the Nifty bulls. At about 22,700, there's a lot of put writing that has happened on Wednesday. About 46,500 fresh Nifty contracts came into that, and therefore a very strong support is seen at that level. So any dip towards 22,700, 22,650, 22,680 on an intraday basis needs to be kept in mind. Let's see whether Mr. Mehta has joined us or not.
Hi, how are you?
Good morning, Mr. Mehta, and it's such a pleasure to host you. We are seeing you for the first time in the current financial year. A very warm welcome to you. And what a fantastic rally it has been over the last 2-3 months. How do you see the sentiment on Dalal Street, and where do you think money should be put in at current levels?
Yeah, good morning and thank you for having me on your show. I think it's been a great time for stock markets, and we are all blessed that we are in this particular industry and in this particular country at this point of time where so much of change is happening and sentiment is at all-time high. But I just want to mention here that valuations also are at all-time high, and from that point of view, we are expressing caution and just suggesting that investors take a pause, wait and watch.
Recording in progress.
All bull markets have corrections, and this one also will have a correction that will provide an entry point. We just don't know what the trigger for the correction may be, but certainly buying at these levels may depress long-term returns. So I'm just being a bit cautious. But nonetheless, I think long-term fundamentals are great, and India is in a transformative phase which will create a lot of wealth for stock market investors.
Right. Very good morning to you, Mr. Mehta. Thank you so much for taking the time out. Well, it's going to be officially the kick-starting of the Q4 earnings season today, with all focus on TCS and, of course, the entire IT sector, which has rather been an underperforming sector. But do you think that this is the right time, that even if the results come out muted, looking at the commentary and looking at the outlook, this may be the time that one should start looking and picking out some stocks from the IT stocks?
See, as I said earlier, that our view for the broader market is slightly cautious to negative. So from that point of view, we do not want to get into any plays at this point of time, including IT. But at appropriate levels where we feel that stock prices have corrected, or more importantly, valuations have narrowed, and that can happen with earnings going up and stock prices not moving up adequately. At that point of time, certainly software shares would be on our list. Because overall this whole AI generative trend in technology may prove to be a big boom for tech companies that likes what we saw, like Y2K, internet, remote infrastructure management, or even application development. So this is one big wave which is coming through in the IT space, and that's going to trigger a lot of tech spends, and that certainly may benefit large software companies and even mid-sized software companies. So from that point of view, I think the fundamentals of the industry certainly have improved. It's just that actual spending needs to pick up, and that needs to get translated into higher revenues for these companies, which I'm sure it will. So from a longer term perspective, rather from a mid-term perspective, we feel that software companies can, get their mojo back and can start to outperform broader markets. It's just that let this earning season be over and done with, and more importantly, let us see what the managements also have to say about pickup in tech spends by the Fortune 500 companies, and how real is this AI generative opportunity for the sector.
So any names that you can come out with and tell us where will you be keeping a keen eye out on and keeping a watch on how the commentary is made out for the experts from the IT industry and from the management too?
See, we've generally been very positive on mid-cap IT stocks, and I do feel that over a longer term, they will outperform the large-cap IT stocks as well. And companies like Persistent Systems, again, disclosure, we and our clients are invested. Persistent Systems, Tata Elxsi, to an extent, Coforge. I think these are the companies, KPIT, which if you can get into these companies at reasonable valuations, you can get sustainable long-term returns in them. Their business models and the verticals they are actually catering to are quite distinct and different, and have a higher proportion of tech spends than the regular IT companies, which are providing their services to banking or BFSI or retail or technology for that matter. So, which industries you have a domain knowledge about, where you are an expert, I think that will start to matter. It has mattered, it will start to matter even more as far as investors are concerned when they look at tech stocks.
Okay, ladies and gentlemen, all naysayers can go on a holiday. We have a fabulous opening in the markets. In fact, for a very, very brief while, the Nifty went above the 23,000 level. At the moment, 100 points higher at 2847. Needless to say, this is a fresh record high. Let's look at the stocks that are contributing to this fabulous uptick on the market. Infosys up first, 1.5% higher, 1529. Remember, we are tracking the 1500 call for you on this one. Reliance, 0.5% higher, 2975. How about HDFC Bank? This is 2% lower, 30 rupees down, 1505. The 200 DMA is acting as a very, very strong resistance for Hindustan, for HDFC Bank. Okay. Let's look at TCS. This is the stock I want to see. 29 rupees higher at 22. Uh, TCS is 13 rupees higher at almost 4,000 rupees. Remember, the earnings come in today. Fourth quarter PAT is expected at about 11,730 crores, up 3% year on year and 6% quarter on quarter. Sales are expected to rise 2.3% year on year to 60,500 crore rupees. The core vertical for TCS, the software company, is banking financial services that is slowing globally, and its main market, the US, is in all sorts of problems. The Nifty has now completely flattened out, 22,745. Let's look at what FNO is doing at this moment. Apart from index heavyweights, it'll give you an idea as to how money is moving in and how money is moving out. Okay. Vedant, no stopping in the rally, 2.3% higher, 370. NTPC, very strong, 1.3% higher, 367. We have Lupin, 1.65% higher, 1631. In terms of losers, it's Oberoi Realty, 2.9% lower, apart from HDFC Bank as the main stocks pulling the FNO lower. How about the NSE 500? Okay. It's a good stock that I can name. Okay, Science Limited, since it's the IT space in action today, 2% higher, 2149. Within the hospital chains, Rainbow Children's Medicare, 3% lower, 1300. Okay, nothing much here as far as markets are concerned, as I had pointed out that it's going to be a quiet day. Coming back to Mr. Mehta, Deepanji, how do you see this disconcerting behavior of the US 10-year yield as also the dollar index? it's now more or less a given that we will not be having rate cuts sooner as we were expecting earlier. I think the cycle has been pushed back. How are you seeing global equities?
See, I'm not an expert on global equities, so I don't want to comment on it. And all I can say is that inflation globally and in India is proving to be far more sticky. We are seeing revival in commodity prices, and that certainly is negative from inflation fighting point of view. And on the whole, I think that earnings will be under pressure in the March quarter, partly because of base effect, partly because of uneven growth rates, and also because of pressure on margins because of higher commodity prices. So, from that point of view, also looking at the valuations, looking at the earnings growth or likely earnings growth, we'd like to be a bit cautious. Global equities, if they correct, will certainly provide the required trigger for a much needed correction in our stock prices as well. And that may be a good opportunity. If the market corrects by say 10% or thereabout, then that's a good opportunity for long-term investors to kind of balance their portfolio and put more money to work, which can then give higher returns over a longer period of time.
Okay. Mr. Kiran Jani has joined us. He's the man responsible for all technical research at JNM Broking. Very good morning to you, sir. Two stock picks for today. How do you see the market?
Very good morning, everyone. So looking at the current market structure and the data point, the market looked fairly in a strong bull run. Now coming to the data point, we have seen that the last trading session, FII took 41,000 lot on derivative side, long side, and it has also reduced 5,700 contracts from short side. So clearly we are seeing that market is in the very strong hand. Secondly, I would like to highlight some options data point. Nifty PCA ratio is trading above 1 and Bank Nifty PCA ratio is also trading above 1. So these are the points where we are seeing that market it's keep going to be an uptrend only. If we are getting any dips towards like in Nifty levels perspective, if we discuss 20,500 would be the great support. If any dips toward 20,500, 20,600 would be the opportunity to enter into the market. Keep a strict stop loss below 22,400. And by next week, we are expecting price target to reach at 22,800 to 850. Same way on Bank Nifty also, we are seeing a very good support around 48,500. Recently, we have seen Bank Nifty had cover is underperformance. Secondary thing, the private bank performance are coming to the Bank Nifty. It is going to add one more advantage to Bank Nifty to going higher levels. So any dips toward 48,500, again, a good opportunity. We would like to buy on dips strategy on Bank Nifty also. So 48,500 to 48,400 is the zone where we would like to re-enter into the market. Keep a strict stop loss of 48,000 and considering all the chart patterns, we are expecting price to reach at 49,200 to 49,500 by next week. So both indices, buy on dip would be the strategy.
Okay. Mr. Jani, what about two stock ideas that you will be going with today?
So two stocks.
Recording in progress.
One is the PVR. Looking at daily chart, we are seeing some rounding bottom pattern breakout on daily chart. Another things, if you check the intraday charts, there is a cup and handle pattern is also there. And after 3 months, stock prices is trading above its 20 days and 50 days moving average. The last trading session, we have seen the volume and price action is giving a bullish stance. So we are expecting PVR to keep moving at higher levels. So at current market price, we are recommending to go long for the target of 1450 a stop loss of 1390. Another stock which we are liking, it is from the PSU stock. It is IRCTC. Looking at current market price, we are seeing that ascending triangle pattern breakout has already been given at 1,000 level. After that, stock prices keep forming a flat pattern. The stock price has a very good support at 1,000 level. So any dips toward 1,000 at current market price, we would like to go long on IRCTC. We are expecting price target of 1050 and we would like to keep a stop loss of 994. So PVR and IRCTC both are the stock, not for the intraday only, but you can also keep this stock as an investment point of view for next 10 to 15 days.
Got that. So PVR and IRCTC. PVR is also in focus because it's opened multiple screens in Bengaluru and Kochi as well. About 14 screens in Bengaluru and about 9 screens in Kochi. So adding on to the number of screens right there. But what is in the thick of action is the precious metals and the move on that one. Record high levels continue for gold and silver. Again today we have seen record high level for gold today. 72,678 rupees per 10 grams for gold is the new high that the gold has touched on the MCX today. Silver for the first time has crossed the level of 84,000 rupees per kilogram. That's a substantial move that we have taken in. Mr. Mehta, I want to understand from you, what do you think and anticipate is the reason behind this sharp surge in the precious metals? How are you looking at this commodity space, the bullion space, and what is your advice to viewers now?
Again, I'm not an expert on precious metals, so I don't want to comment on it. And buying gold doesn't really make sense to me because equity returns have been generally higher over the past several decades. Although gold has been a great asset class and a good, I would say, insurance policy against any kind of meltdown in the global markets. But I think cash is just best at this point of time because in the event of a correction, it will provide the strategic boost to long-term returns if you're able to have cash and deploy it when there's a correction in the market. At this point, I mean, look around you, things are just getting a bit overheated everywhere, whether it's US stocks, Indian stocks, gold, Bitcoin, oil prices. I think there is something, a lot of excess liquidity is driving a lot of risky assets higher and higher. And I don't feel comfortable, investing at these levels. It's not that I'm advocating complete sale of all holdings or anything like that. It's just that strategically keeping portfolio cash in the portfolio at slightly higher levels may be a safer strategy.
Okay, but would you want to play the gold and silver rally through the financiers in the stock markets, through Muthoot or Manappuram Finance? These stocks have had a stupendous run. Or do you think the jewelry space is going to be interesting? Is that a space that you watch out at?
See, I think both these, more than the jewelry space, the gold loan companies certainly benefit from rising gold prices because it provides them more flexibility and a greater gap to lend to existing customers. From that point of view, certainly they should do better. But there's intense competition in the gold loan business. Although one major player, IIFL, has been barred from extending further gold loans, but still the competitive pressure, especially from banks, is certainly on the higher side. And companies like Muthoot and and Manappuram, I would say, are finely balanced and pretty well priced. So I'm not really keen on investing in them just because gold prices are higher. As far as retailers are concerned, it could be a warning sign. It could mean lower sales because affordability does come into play. So let's see how that plays out. But specifically, if you want to play this rising gold, and again a disclosure here, if you want to play the rising gold market and rising commodity prices, the best way to play it is MCX. And that's a company which has been completely transformed as far as the technology platform is concerned. That's completely stabilized, and technology costs for the exchange are going to come down significantly in this year. And their options volume is scaling up very well. And despite so many competing exchange, they have been able to maintain their market share. And there are many other positives like direct market access to foreign portfolio investors and greater retailization of the options market. And if interoperability is permitted, then it will give a big boost to the options volume on MCX. And MCX generally does very well when commodity prices, gold and crude oil, start to do well. So specifically higher gold prices, you want to invest in that micro theme, then with usual disclosure that we and our clients may be invested, the best stock to play would be MCX.
Wonderful. It's extremely difficult for any person to get a decent stock call out of Mr. Mehta for two reasons. One, he's extremely, how should I say, tuned into market realities, and the fact that it's overheated across the space. Look at cryptos, look at commodities, look at equities. Within equities, look at small caps, mid caps. All of them are roaring. the risk reward is definitely not in favor of substantial returns, and therefore we often get Mr. Mehta to inject a note of caution into this excessive froth that we are seeing across all asset chains. This is as good a time as any to check the technical profile of MCX from Mr. Kiran Jani. Kiran, what are the charts telling you? It's just a shade below its all-time high of about 400 and no, its all-time high is 39,900. So view on MCX.
So looking at current market price or a current daily chart of MCX, we are seeing that the previously in February month, MCX made a high of 39.90. It's almost 10 points away from the 4,000 level. And from that level, we are seeing that prices have made a two lower low. However, on those lower low, the momentum indicators made a bullish divergence. And because of that only, we have seen that after making a low of 3,000 or 3,100, prices again started to moving into the rising channel. Now at current market price, we are seeing the immediate resistance of 3,800 has been given a breakout, and after that, there are 2 days we have witnessed the rally also. So at current market price or any dips towards 3,800 would be the opportunity for go long on MCX. So at current market price or any dips towards 3,800, sorry, we are recommending to go long. Keep a stop loss below 3,800, and looking at current market price, we are expecting price target to breach the previous all-time high and can go above 4,000 also. So it's not only for the intraday again.
Right, sir. Right, sir. We're very short on time. One quick view on ITC and Kotak. Very quick.
Yeah, so looking at ITC and Kotak, both are a reversal chart pattern. Coming to ITC first, at current market price, we are seeing a resistance of 100 days moving average. So any dips toward 430 would be the opportunity to enter. Keep a strict stop loss of 425, and higher level, we are expecting price target of 450. Kotak Bank has also given a breakout from inverted head and shoulder and recently crossed these 200 days moving average also. So again, Kotak, any dips toward 1800 would be the opportunity to enter. Keep a stop loss below 1790. Both have the value.
Okay, ladies and gentlemen, we have the opening quotes. The Nifty is opening with a gap down of 80 points, 22,672. The Bank Nifty has a 200-point gap down. Remember, this is a fresh expiry, weekly expiry for the Nifty, and next week we have 1 day less. So options premium in any case will be squeezed. 26,667 for you. There's a red tick on the Nifty IT index, and as also the Nifty 500. So it's the back foot that we are moving on. Let's look at index heavyweights. Okay, Reliance 10 rupees lower, 29.47. HDFC Bank 11 rupees lower, 15.25. Infosys 6 rupees lower, 1500. How about TCS? It's the earnings boy today. It's starting on a back foot, 18 points lower, 39.68. Out of the 10 index heavyweights, only two are in the green. Tata Motors 0.5% higher, 1,018. L&T 10 rupees higher, 37.63. So nothing much to report as far as index heavyweights are concerned. Let's look at the top gainers in the F&O space. That will give you an idea where money is moving in. There is absolutely no stopping BEL, 2% higher, 233.75. Petronet LNG, fresh record high, 1.3% higher, 306. Syngene Lal Path Lab in the green, so it's going to be a pharma day. Remember, Pharma was down on Wednesday. Let's take a look on top losers as far as F&O is concerned. Okay, there's a sea of pharma stocks here also. Laurus Labs 2% lower, Sun Pharma 2% lower, Glenmark about 0.5% lower. How about the most active stocks? Anything that catches my interest? It's BEL. This is a runaway stock, record high. Already 32 lakh shares have been traded. We'll go to Mr. Kiran Jani on BEL shortly. NSE 500. Let's look at the top gainers as far as NSE 500 is concerned. Pharma chains. Metropolis Healthcare 7% higher, 1925. CAMS 5% higher, 3210. Credit Access Grameen. This is a stock that I'd like to discuss with Mr. Behta later. 3% higher, 1470. We have CDSL 1922, 2% higher. Hind Copper 2.7% higher, 368. Coming to you straight, Kiran. Are you chasing momentum in BEL or any other defense stock, or are the markets overheated?
So looking at current market price, if we check about the defense stock, BEL definitely will discuss first, and then one more stock we would like to highlight. So BEL at current market price, we are not encouraging to enter because the risk reward ratio is not in that much favor. So any dips toward 225 would be the level to enter, and keep a strict stop loss below 210. So at current market price, we are not recommending, wait for the dip, and whoever is holding this particular stock, keep a strict stop loss of 210. Now coming to the another defensive stock which we are liking. So this stock is not only for the defense but for the shipping area is also considered. That is GRSC, Garden Rich Shipping Builders. So at current market price, we are seeing prices is trading near it ascending triangle pattern breakout. Since last 3 days, we are seeing prices is trading into the falling channel. But today we are seeing that prices is taking support of somewhere around 870, 880. And for the intraday perspective, it is trading into the higher top, higher bottom pattern. So at current market price, we would like to go long on GRSC. 890 level is going on. Keep a strict stop loss of 870, and at immediate level, we are expecting price target of 940. So GRSC as a defense, as a shipping corporation.
Right. I'll just mark the stocks that have hit all-time high in early trade despite a negative red tick on the market. It's BEL that we've discussed. Indigo 37.75. It's about 0.5% lower now, but a fresh high. Pencil maker DOMS Industries 17.36. Phoenix Limited 2.6% higher, 31.09. Coming to you, Mr. Mehta, any view that you would offer on Credit Access Grameen? This was a stock that you had highlighted about 3 months ago. It did hit a very strong record high, but now again available at its 200-day DMA. A view on Credit Access Grameen?
See, we are long-term positive on Credit Access Grameen as a measure of disclosure. And we do feel that it's a quality player when it comes to MFI. And within the entire banking and financial services NBFC space, in our opinion, MFI is the best segment to be in, to remain invested in, because of high growth rates and very high net interest margins, which will definitely cover NPAs whenever the cycle does turn for the MFI sector. So from that point of view, we are positive. And certainly, since we are more or less fully invested in it, I mean, we don't anticipate increasing our holdings in it. But certainly, I think investors who are looking at increasing their exposure to banks, NBFCs, could look at Credit Access Grameen. But it's not a recommendation; it's just it's a kind of a suggestion to study it and maybe buy at declines. But I cannot just keep on reiterating that in overall market view of ours is slightly on the negative side. So we just have to express caution on any stocks on which we have a positive view.
Okay, let's again look at a whole host of stocks that are moving away on the Nifty. Even though the index is down 0.25%, NTPC, L&T, Tata Motors, Hindalco, M&M, Bajaj Finance, these are some of the top movers on the Nifty. Among the sectors, it's the real estate space that's taking it away again, 1% higher for this one. No let up in the kind of rally that we are seeing. A lot of stocks like Phoenix Mills, of course, it was in the news. For reporting 27% growth in Q4 total consumption, and therefore you see the stock price inching higher. Godrej Properties constantly on the up move, 2% higher for this one. Mahindra Life Spaces, Brigade Enterprises, you have Oberoi Realty, Macrotech, Ashiana Housing 7% higher for this one as well. A strong move being seen across the space for real estate space. It's the small cap space also that's been buzzing. And within the small cap basket, then you have stocks like Credit Access Grameen, already discussed. CAMS is up almost 4.5%, 5% now for CAMS, and this is after the company has got certificate of authorization to operate as online payment aggregator from the RBI. So that's the trigger on the back of which CAMS is really moving sharply. You have Hindustan Copper. You have HFCL, Tanla Platforms, NMDC, CDSL, Cochin Shipyard, strong moves right there. The railways back is moving sharply as well. IRCON International, IRCTC, as was pointed out by Mr. Jane again, that entire space is really buzzing in trade too. A lot of action really unfolding in the F&O space as well. Metropolis Healthcare, 7% higher, topping the charts there. Following that is Hindustan Copper, you have Dr. Lal Path Labs, you have Cummins, and then you also have BEL as well. A strong move being seen across the board. Mr. Jani, to you first. Metropolis Healthcare, would you chase the momentum here? This company has reported growth in the overall revenue in Q4 FY24 and the core business revenue as well, which has led the stock higher after the earnings. How would you really look at this technically?
So coming to the Metropolis of this sector, there are two stock, Metropolis and Dr. Lal. So Metropolis is a first mover, is already made a bottom somewhere around 1600 and it is started moving into the height of high bottom pattern. Recently, it has given a breakout from the rounding bottom pattern also. So at current market price, risk reward ratio is not that much favorable. So we are not going to chase Metropolis at current market price. We have who having this stock particularly, they can hold this particular stock with the stop loss of 1800. And looking at the chart, we are expecting price target 2000 plus. So at current market price, we are not chasing, but Dr. Lal Path, definitely we would like to go long on at current market price because there is a fresh breakout of flag pattern. Number one, number two, stock price was facing a resistance of 50 days moving average, which is crossed by today. And there is also a falling trend line breakout. So multiple breakout is panning out on Dr. Lal Path Lab. There are chances that Dr. Lal Path Lab can touch the price target of 2500 to 2600. So at current market price, anyone can go long on Dr. Lal Path Lab, keep a strict stop loss below 2300. And the first target is 2500, second target is 2600. So Dr. Lal Path Lab would be the preferred choice.
Okay. Mr. Mehta, before we let you go, the pockets that I want to discuss with you are the runaway pockets of defense and railways both. Defense, again, we are seeing a lot of momentum coming back. So HAL, BEL, Cochin Shipyard, the other shipbuilder stocks, they are back in focus. Railways, after some word of consolidation, it's back in focus with stocks like IRFC, RVNL and the IRCTC buzzing in trade today, Ircon International too. What is your own sense after this kind of run-up has happened? How are you really looking to deploy fresh funds that are interested to chase momentum in this space, sir?
Wait for a correction. I think I've been saying that consistently. I think defense stocks are pretty well priced and well discovered at this point of time. And we've seen a rally in them for now more than a year or so. So I would say that they're a bit over-owned as well. So at corrections, they make sense. See, long-term fundamentals are good. There's good earning visibility, and definitely a third term for the NDA should drive even higher expenditure in defense and in railways, which will keep the order books ringing for these companies. But a lot of it is captured in the stock price, and essentially these are capex heavy, capex related companies, project companies. So you should expect volatility in earnings.
Mr. Mehta, before we bid you goodbye, your view on Bharti Hexacom. This is a company that's going to be listed today. 570 was the offer price. The issue worth about 4,200 crore rupees was subscribed 29 times. Would you stick your neck out?
No, not really. I think when you have Bharti Airtel, which is quoting at cheaper multiples, considering the kind of subsidiaries they have engaged in very interesting businesses within India and geographically, I feel that's a better play in the telecom space than Bharti Hexacom.
Okay, ladies and gentlemen. Thank you so much, Mr. Mehta. Like I said, it's always such a pleasure to host you. You inject that much required caution in the dreams and the excessive froth that we have in the market today. And we hope to look forward to MCX as well as Credit Access Grameen. Thank you so much, sir. Okay, ladies and gentlemen, we'll come back to the market. The Nifty at the moment is at 22,712, 41 points higher. I am very keen to look at the 22,700 option call for the Nifty for 18th April. At the moment, it's priced at about 130 rupees. This is something that we will track for intraday today. Remember, the day's low has already been 102. And the counter at the moment is at 130. This is something that I have on my radar as far as prices are concerned. Okay, let's get Mr. Jani into the conversation. At the moment, there is, as we say, a very strong move coming into all the metal stocks. This has happened for a while. Mr. Jani, let's look at Hindustan Copper. Needless to say, the float in the market is so less that the stock seems to be running up on a lot of fumes as well as very, very high expectations. Now at 370, what do we do? Do we stay away?
So looking at monthly chart, stock price is giving a decade breakout, I can say. By 2012, the stock price made a high of the 320, 350. And since last couple of months, stock price was facing a resistance of 300 level. This month, stock price has crossed this 300 level, and after that, the current market price is 370. So definitely at current market price, we would not suggesting or advising to go long. Anyone who is holding this particular stock, definitely they can hold this particular stock. Any dips toward 350, 340 would be the opportunity to enter into the market. See, again, overall, the market is into the bullish zone. So we have to wait for the right price because all are the indicators into the extreme overbought zone. So at current market price, definitely the risk reward ratio is not that much favorable. So for any risky bet, we would suggesting people to wait for the dip. There will be the time that dip will come and we should enter into the market. So level wise, 330, 340 would be the level for the Hindustan Copper to enter into the market. Keep a strict stop loss of 300. And looking at monthly chart, definitely the stock price is heading towards 400 and 420 kind of a target in upcoming time. But for the risk reward point of view, we would like to wait.
Absolutely. I think this is very practical advice. If you hold the stock, there is no point exiting, ride the rally. But entry at current levels is not advised at all. Kiranji, the other sector that's booming is the power space, and for all the right reasons. North India is afflicted by a very heavy summer, and consumption demand, peak demand is again 12% higher than last year at the present moment. Any stocks in the power space that you think deserve mention? NTPC, of course, is at a record high today, almost 371.
So in power, we are liking two stock. Both are the power distribution stock. One is the Tata Power and one is the Adani Power. So I would like to talk first of all for the Tata Power. Tata Power at current market price, we are seeing prices is giving a breakout from the ascending triangle pattern number one. Number two, the momentum indicator is also entered into the bullish zone. So considering the both pattern, we are expecting Tata Power to keep moving at higher level. So even at current market price, anyone can go long on Tata Power. Keep a strict stop loss below 420, and looking at current market price of this particular triangle, we are expecting price target of 490 to 500 in upcoming time. So Tata Power is first stock. Another stock is Adani Power. Adani Power has already spent a big time correction or we can say consolidation zone from December 2023 to March or April 2024. So after 4 months of consolidation, stock price has given a breakout previously. Now at current market price, anyone can go long. 600 to 610 is the accumulation zone, or even at current market price, you can go long. Keep a strict stop loss below 570. And looking at particular chart pattern, we are also considering a flag pattern also. So based on this multiple pattern breakout, we're expecting price target of 700. So Adani Power and Tata Power both are on our radar.
Okay, so that's as far as the power space is concerned. There's one stock that I want viewers to take note of, and that is Entero Healthcare. This stock has come on the radar of brokerage houses. Jefferies has initiated a buy with a target price of 1510. The stock has shot up 16% in trade today after this brokerage house report as well. Remember, the company got listed, it got a negative listing about a month back, and of course there were concerns on the financials as well. 3 consecutive years, fiscal years, on financial stability and profitability, the concerns were there. But Jefferies now believes that the company is a fast-growing healthcare products distributor in a large and fragmented market, and the company's wide and reach as far as the product offering should lead to 20% organic revenue CAGR growth from FY24 to FY26. That's the view as far as Jefferies has got, and therefore we have a 16% uptick seen on this one. I wish Mr. Mehta was here to give us a fundamental view on this one, because I don't think Mr. Jani would have a view because it's a recently listed stock, so the charts may not be very indicative. Mr. Jani, have you taken out a report on this stock fundamentally from your broking house?
No, as of now, we are not tracking this particular stock.
Okay. And apart from Entero Healthcare, the entire pharma space is also buzzing in action. So be it Lupin, be it Syngene, Biocon was running in the last few days as well. So the entire pharma space is coming back in flavor. Mr. Jani, you did talk about Dr. Path Labs as your preferred pick, but in the mainstream companies, Sun Pharma, there is some negative news today. Official action is being initiated, but Dr. Reddy's, it's launched a migraine-related drug, and that's got an approval for international use in Germany, and therefore the company will be looking at subsequent other countries to be launched it. And Lupin is back in flavor again because there is a brokerage house report even on Lupin where Nomura believes the target price could be 1949. How are you? And Syngene is one of the top movers in the F&O space today. How are you navigating through these moves being seen on the entire pharma space?
Let's discuss about the Nifty Pharma Index. If you check the Nifty Pharma Index, the index is continuously trading into the height of higher bottom pattern. Recently, we have seen some consolidation, or we can also say the price correction happened from level of 19,000, and the index made its low somewhere around 18,000. From 18,000 level, we are again seeing that the Nifty Pharma Index is again trading into the height of higher bottom pattern. And during from 18,000 to at current market price, we are seeing that mid cap pharma is doing well. However, at current market price, the large cap pharma like Oro Pharma, it's our preferred pick as of now at current market price. Sun Pharma has already given a breakout from 1500 level, it reached to the 1660, and now it's again into the consolidation pattern. But Oro Pharma, it's a reversal pattern. If you check the current market price, stock price has given a breakout from its double bottom pattern. Stock price were consolidating in the range of 20 days and 50 days and 100 days moving average. Now at current market price, we are liking Oro Pharma to go long. 1100 is the price. We are expecting price to touch 1200 kind of a level in upcoming time, and we would like to keep a stop loss around 1080. So Oro Pharma is one of our pick. Another is you are already discussed with Divi's Laboratory. Divi's Laboratory was the underperformed stock. However, since last 1 week, we are seeing prices is trading into the very sharp up move height of high bottom pattern. Number one. Number two, stock price were trading below all the moving averages, but in last 5 days, we have seen that prices has crossed these all important moving averages. So on intraday price, the flag pattern has been given a breakout. So at current market price, Divi's Laboratory is also a very preferred choice over pharma counter. So one can go long at current market price, keep a stop loss of 3700. And looking at all the chart pattern, we are expecting price target of 3900 to 4000 in upcoming time. So Oro Pharma and Divi's Laboratory both are the preferred pick in overall pharma sector.
Let's look at the broader markets now, ladies and gentlemen. The Nifty at the moment is inching towards the green. Remember, I had mentioned that 22,700 is a level that we would be looking for, and that is the call that we are tracking. The Nifty now down just 35 at 22,750. Let's look at volume buzzers. This is a space where a lot of hectic trading activity is concentrated in quality stocks as well as those which are showing smart traction. Kiranji, needless to say, a lot of these stocks are on a record high. So with the due caution in mind, Petronet LNG, 3% higher, fresh record high, 312. Already 50% of 5-day volume has happened in the first 20 minutes of trade. How are you seeing this screen, Petronet LNG?
So looking at some long-term chart, or at least from last 3 months, stock price was into the consolidation phase. The 300 and 295 was the cluster resistance. Last trading days was the first trading day when stock price is able to cross this 300 level, and today we are seeing some follow buying also. So definitely anyone can go long at current market price, or any dips towards 305 would be the opportunity to enter. Keep a strict stop loss below 295, and looking at monthly or a weekly chart, definitely the stock price is heading towards 350 level. So positionally we are expecting 350 as a target, and keep a strict stop loss below 295.
Okay. Now let's look at the entire PSU space. Almost all of it is buzzing with decent gains. We've discussed NTPC record high, 3% higher. It's now inched up another 2 rupees, 373 for you. BEL, we've discussed it threadbare for the last 3 or 4 trading sessions, 2.5% high, 234.20. We have PNB Housing and PNB both moving in sync, 1% higher each. Hindustan Copper, we've discussed 362, 20.5% higher. Banks are in good shape. Bank of India, 145.90, 1% higher. we have a strong move coming into Ircon and Ireda, and we have GMDC and Gas Authority also moving in the green. Let's look at two spaces in the wealth creation sector which are doing extremely well. Kiranji, you are a growing part of this wealth creation space via the brokerage that is doing some fantastic job in F&O trading. I was just wondering if you can share your views on CDSL and CAMS. Both of them are doing phenomenally well on the charts and still below their record highs.
Okay, so CDSL we are discussing, right?
Yes, CDSL and CAMS.
Okay, CDSL and CAMS. Looking at CDSL chart, stock price has given a breakout from the falling trend line number one. Number two, stock price on intraday chart, stock price has given a breakout from black flag pattern also. So definitely we are expecting CDSL to again regain the momentum and cross its previous all-time high somewhere around 2000 level, which is recently made. So at current market price, definitely we would like to go long on CDSL. Keep a strict stop loss below 80. And the first target is 2100, and once this 2100 rupees is crossed, we can also expecting price to touch towards 2400. So CDSL at current market price definitely can go long. Another is the CAMS. So CAMS, it's still into the consolidation zone. Today we have seen a gap up opening also, but stock price is not sustaining the current market price or today's high. So CAMS is a conditional buy. If it today's close is about 3200, then only we would like to go long. Otherwise, let's wait for one or two more days to go long on CAMS. So whoever is holding particular stock, they can hold with a keep strict stop loss of 3000. If stock price is closing about 3200, then it will be considered as a fresh breakout on daily chart. And after giving a closing on above 3200, we are expecting price target of 3500. So CAMS, we are just waiting to cross 3200. CDSL one can go long at current market price.
Okay, let's also focus on the entire auto space as well. Tata Motors is pulling up in trade 1.5% higher now. 1027 can be seen on this one. Remember, the company has announced that its electric vehicle arm has tied up with Shell, and therefore there is some kind of a move that's sparkling in as far as Tata Motors is concerned. Within the auto space, which are the top stocks, Mr. Jani, that you are really putting in fresh money in?
So in auto stocks, we have already seen a large amount of rally. Now at current market price, Tata Motor is one of the stock which we are liking because it has given a breakout from its previous consolidation, number one. Number two, stock price has given a flash crash from 1000 to 900 level, and from that level, stock price again trading into the height of high bottom pattern. So Tata Motor is the stock which we are liking. So at current market price, anyone can go long. Keep a strict stop loss of 1000 rupees, and looking at price chart, there are chances we will touch 1100 level. So Tata Motor is the stock which we are liking. Number two, Hero MotoCorp, one can see. Hero MotoCorp is a reversal pattern. It is trading into trading below the 50 days moving average, but it is trading above 100 days moving average. Since last 1 week, we are seeing price is trading into the falling channel only. But still at current market price, we are expecting 44 to 4500 is a very good support. So it is trading into this accumulation zone. One can go long at current market price. Keep a strict stop loss below 4400. And if prices is not reaching 4400, then there are chances we will see prices to regain, and it will touch again 4800. So Tata Power and Hero MotoCorp both are the preferred choice.
In fact, the auto ancillary space also, Mr. Jani, is buzzing. Sona BLW, that's one stock that's shot up in trade about 4.5-5% higher. There's stocks like Jamna Auto that's in constant momentum, and the stock is also up about 2.5-3% in trade. Uno Minda is up in trade as well. There is news flow of land acquisition as well for its alloy wheels plant. So this entire space is also buzzing. So along with the major auto OEMs that you have talked about, is auto ancillary also on your top radar?
So in auto ancillaries, we are liking one stock. We will discuss first that stock, that is Rico Auto. If you check Rico Auto chart, stock price has given a breakout from its long consolidation pattern at 120 level. After breakout from 120 level, stock price made a high of 160 or 170 kind of a level. From that particular level, we are seeing stock prices trading into the falling channel. Today, we have seen prices has taken a support of its 20-day moving average. Number one, stock price has a horizontal support of 130, 135 level. So from those levels, stock price is trading above 140, 145 level, and momentum indicator is also again regaining into the bullish zone. During this particular price correction, volumes are not that lucrative, so the fall will not consider as a technical thing. So at current market price, we are recommending Rico Auto to go long. Keep a strict stop loss below 135, and looking at current market price, we are expecting prices to touch again 170, 175 kind of a level. So in auto ancillaries, Rico Auto would be the preferred choice.
Let's again take a detour to the markets. There is a bit of a slip up happening on the Nifty Bank. 0.5% lower, 216 for you, 48,765. The reason is not far to guess. Remember, the next week is truncated. Wednesday, which is always the weekly expiry for the bank Nifty, is a holiday. Therefore, this expiry will happen on Tuesday. This week was lost because Thursday was a holiday. So it's a 3-day session for the Bank Nifty amid very, very steep rises that we've seen all of last week. Let's look at individual stocks, Kiranji. HDFC Bank in particular, very strong move all of April, up about 4.5% higher. 200 DMA is acting as a very, very strong resistance. How are you seeing the charts? And what is the medium-term outlook on HDFC?
So looking at daily and weekly chart, HDFC Bank made a fairly bottom at somewhere around 1400 to 1380. From that level, we have seen prices gaining the momentum, and it has touched a 1550 kind of a level. And that particular level, as you mentioned, there is a 200 days moving average resistance. And from that level, since last 4 days, we are seeing prices trading into the lower top, lower high pattern. Now at current market price, stock price has a number one support. It is a 100 days moving average. Number two, stock prices also have a support of daily gap support. Number three, stock price is taking a support of its rising trend line also. So multiple support we are seeing on daily chart. So any dips towards 1500 would be the accumulation kind of opportunity. So at current market price or any dips towards 1500 would be the opportunity to enter into this particular stock, or you can continue accumulate. Keep a strict stop loss below 1470 as per the medium term outlook, which is the breakout level of ascending triangle pattern. So if prices is not reaching again 1470, then there are chances we can see the momentum will start again and stock price will start again moving into the height of higher order pattern. Because of last continue 10 days of uptake, prices is taking some rest, and we have generally seen that stock market is not the place where prices keep moving at higher level. So this is a consolidation phase, or we can see some retesting is happening of this previous breakout. So these are the opportunity where investor or a trader can enter. So keep a strict stop loss of 1470, keep accumulating till 1500 level, and we are expecting prices to touch again or cross even its 200 days moving average, and our medium term target is 1600. So definitely we would like to go long on HDFC at current market price also.
Okay, the first half an hour of trade has happened, ladies and gentlemen. 22,700 is now with the bears. The index is at 22,650 as far as the Nifty is concerned. Let's look at what is the contribution coming in from those which are in the green and those which are pulling the index lower. Needless to say, banks are in a bit of a profit booking. HDFC Bank is pulling the Nifty lower by 16 points. Kotak is pulling the Nifty lower by 8 points. Sun Pharma and Infosys respectively 7 and 6 points, contributing to the Nifty's downfall, and ITC about 11 points to Nifty's color of red. Okay, what is in the green? None of the index heavyweights which traditionally pull up the index are in the green. So as I had mentioned, it is going to be a muted day. Okay, NTPC, fresh record high, contributing 8 points to the Nifty. Tata Motors, we've just checked it technically, 5.5 points. L&T, Coal India and Bajaj Auto respectively 2-3 points each. The Nifty slipping further, now 112 points lower, 22,638. This will also be a very good time to check the broader advanced decline ratio in the market, which is now firmly in favor of bears. 1177 stocks on the NSE are in the red compared with 777 that are in the green. We track 19 indices for you. Only 3 are in the red, only 3 are in the green. The top losers are the metals index. Absolutely no surprise there. Very, very high round of uh, gains that we had seen over the last 5 trading sessions at a record high. The metals index is now consolidating. Remember, the dollar index in the US rose very sharply to its November highs, given the background of rising inflation and the feeling that interest rate cuts are now further off. So, strong moves on profit booking coming on the Nifty metals index. The FMCG index is down about 0.7%, 53,900. Financial services index is down 0.5%, 21,580. What are the ones that are gaining? It's the Nifty Energy Index, no surprise there. NTPC, Tata Power, Power Grid, Petronet, LNG, across the board, there is a smart move coming in. But even here, the intraday highs have been sold into. Let's look at new highs in the market. That will give you an idea where money is moving in despite the broader weakness. Okay. KEI cables. This is 4.7% higher, 39.79. This is a company that is into the transmission and distribution phase. They set up electric towers which help in the transmission of power across states. Petronet LNG, 3% higher, 312. BEL, Cummins India, BSE, ABB, and NAM India. These are some of the stocks that are at all-time highs. Kiranji, anything that catches your attention that we may have missed marking?
So two things we are liking. If you talk about the capital goods, definitely ABB and Siemens are the stock which are moving continuously. So ABB at current market price, definitely we would like to go long because 2 days back there was one bearish engulfing candlesticks pattern has been formed, and now the high is taken out. So this will be considered as a failed pattern breakout, and once the pattern is getting failed, the again prices can give a sharp upstick because of the short covering move. So ABB would be the stock at current market price. Another thing which we are liking into the current market price is the real estate space, already discussed by you. So in real estate space, which stock which we are liking is Lodha. If you check the Lodha's current market price, it is not sustaining its today's high, but the stock price is giving a breakout from the ascending triangle pattern. And the momentum indicator is also retesting its bullish zone. So we are liking Lodha to buy at current market price. Looking at the current market price or looking at the daily chart pattern, we are expecting Lodha to touch 1300 kind of a level in upcoming time. So buy at current market price, keep a strict stop loss below 1180 and for the price target of 1300. So if you check overall market, real estate space is doing very good. So definitely one can keep an eye on real estate.
Okay. From the broader market space, there's another stock that's moving up pretty sharply despite all that volatility and lower trades that we are now witnessing on the benchmarks. It's Ramco Systems. Remember, the stock had hit a 20% upper circuit on Wednesday, and the stock is again up in trade today, the tune of about 9.5% higher at 373. Remember, the company had signed a significant multi-million-dollar deal with Korean Air, the largest airline in Korea, and the deal entailed providing technological support for Korean Air's new engine maintenance complex that the company had recorded. On Ramco Systems, technically, how do you really look at the stock? Is this a stock that one should be really looking at on the back of such positive news flow?
So if I'm not wrong, that news came out last trading days, and the aircraft servicing part, it is a lacking industry at current at in India, and the Ramco Cement is the first company to get this particular kind of a contract. So definitely we are liking this stock at current market price. Technically also the stock price has given a breakout from the big rounding bottom pattern. Number two, on weekly chart, if you check, stock price is also given a breakout from falling trend line. So multiple reason to go long. But definitely in 2 days, stock price has given a price movement like 40% kind of. So there are chances of consolidation also. So any dips towards 350, 340 would be the enter entering price or the accumulation zone. So not at current market price, but any dips toward 350, 340, we would like to keep a long on this particular. Keep a strict stop loss below 300, and looking at weekly chart, we are expecting price target of 450, 460 in upcoming time. So Ramco system definitely can go long at dip.
Okay, fair enough. And remember, Entero Health that I just pointed out is now hit a 20% upper circuit in trade after that Jeffrey's initiation on the report on the stock as well, with a 1500 target price, and the stock has hit 20% upper circuit now. We'll keep an eye out on that one. But as we have been discussing, we'll also keep an eye out on the new listing that will be coming up in just about 8 minutes from now, and that is Bharti Hexacom. And the pre-open price settled is at 755 rupees against the issue price of 570 rupees, which is a 33% premium for Bharti Hexacom. So we'll keep an eye out on that one as well. In moments from now, we will take you to the live listing from the exchanges as well. Markets are very, very volatile at this stage, half odd percent lower as far as the Nifty is concerned. And most of the sectors have slipped into the red, barring, say, the healthcare space, the realty space, the PSU banking space, which is absolutely flat, and some gains coming in on the mid and the small caps basket as well. The next Nifty 50 index is also in the green as of now. Let's look at a few stocks that are buzzing from that index, and maybe if we can eke out some views from Mr. Jani on that. Adani Energy Solutions is up 2.2%. Tata Power, he had indicated earlier, is up and about in trade. Trent is moving up 1% higher. Samvardhan Motherson is up. We've discussed the auto ancillary space. Geo Financial Services is up by 0.7%. We have Siemens that's up and about. DLF, Avenue Supermarts, and even Zomato is up by half odd percent. In fact, on Zomato, there is another positive report that's come in from JM Financial, and that's as far as maintaining a buy on the company is concerned, and the target price of 260. Your sense, Mr. Jani, how would you really look at Zomato?
The Zomato is trading into the height of her bottom pattern since a couple of months, and on monthly chart also it has given a breakout from 170 level, which was its previously all-time high. And after giving a breakout, we have seen prices were into the consolidation zone, or it has also formed rounding bottom pattern. So multiple bullish point we are seeing on Zomato. But there is a one risk we are seeing on particular Zomato chart, that is the momentum indicator is trading into the extreme overbought zone. So there are chances we can see prices to keep moving into the range. The upside resistance we are seeing at current market price is 210. And at bottom, we are seeing a support at 180 level. So 180 to 210 is the range for the Zomato in upcoming time. So at current market price, the risk reward ratio is not that much favorable. So any dips towards 180, 185 would be the price range where we would like to enter into the Zomato. Keep a strict stop loss below 180 and for the price target of 210. So whoever has this particular stock, they can keep ride the rally. But at current market price, we are not expecting to enter fresh. For fresh entry, at least you wait for the price range of 185 to 180.
Okay, ladies and gentlemen, we are now at the fag end of the show, as also this week. Let's take a pause and look at a Nifty 500, stocks that have outperformed not only the broader market, but have gained the most within this broad index. I'll just take a few names. Some of them we've discussed, and I'll request Mr. Jani to help us out on Exide Industries. 20% higher, ladies and gentlemen, in this week, fresh record high, 385. Hindustan Zinc, 17% higher, 398. HEG, remember, this is a company that makes graphite electrodes for melting steel scrap. 2381, 14% higher. Remember, these are weekly gainers. Vedant, 14% higher, 363. Petronet, Hind Copper, KEI, KSB, Motilal Oswal Financial Services, these all we've discussed. To you, Mr. Jani, Exide Industries.
So coming to the Exide industry, if you check the monthly chart, stock price was into the consolidation phase since 2020 crash. And from that particular consolidation pattern, the stock price has given a fresh breakout. Number two, stock price has formed recently a flag pattern, or we can also say cup and handle pattern on weekly chart. So multiple pattern breakout has been given. Now at current market price, we are liking this particular stock. Definitely, one can change the sorry, one can change the momentum also. So at current market price 380, 85, anyone can go long. Keep a strict stop loss of 350. If stock price is not breaking below 350, then there are chances we can expect price target to touch of target of 450 to 460. So this is a positional outlook. So if anyone is okay to give a 3 to 6 month kind of a time horizon for the on exide industry, then definitely at current market price or any dip, you can go long. Keep a strict stop loss of 3.
Okay, ladies and gentlemen, time for us to call it a day. We'll just wrap it up and mark two stocks. IRCTC first. Remember, this was a pick that was suggested by Kiranji. Days high, 1036, 1.35% higher. And we'll also take a look at MCX. The counter is now at 39.95, about 2.5% higher. These are the two stocks that we had discussed as far as markets are concerned on the technical side. The index has slipped 117 points lower now, 22,640. The bank index, Nifty Bank, 48,700, 288 points lower. The IT index has a downtick of 7 points, 73 points, and the Nifty 500 is down about 27 points. It's a round of profit booking ahead of the weekend as far as the broader markets are concerned. And next week, because it has a holiday right in the middle on Wednesday, therefore, indices, most of them who have a weekly expiry on Wednesday or Thursday, are now on the back foot. In terms of record highs, the stocks that we've discussed are KEI International, we've discussed Indigo, we've discussed Cummins India, and a whole host of stocks such as BSE, such as Indigo. The metal space, some of them is still active, but most of them are seeing a round of profit booking. Last 5 days have been phenomenal on the long side as far as metal stocks are concerned. Hindustan Copper, 1.2% higher, 362. Hindustan Zinc, 0.5% lower, 400. Coal India going strong, 1.3% higher, 462.50. And we have stocks within the PSU banking space that are doing pretty well. As far as the PSU space is concerned in defense, there is absolutely no letter. Fresh record high on DEL, 233, 2% higher. Garden Reach Shipbuilders, 1.2% higher, 891. We are now looking and waiting for the listing of Hexacom. Ladies and gentlemen, the IPO was at 570 rupees, and let us see what the listing is at. The counter saw an oversubscription of 28 times. The size of the offer for sale was 4,275 crore rupees. The premium is right there in front of you, and the listing should happen in the next couple of seconds. Let me get the price for you as far as Hexacom is concerned. This should be an IPO that was priced at about 570 rupees. Hexacom has listed at... Sakshi, could you help with the listing price of Hexacom?
It's listed at 760 rupees, which is a 755 rupees per share, and that is a 33% premium that we have seen, and the stock is moving up higher at 761 right now. So it's inched up even higher, and so the per lot profit that investors can hope to get who've got the allotment is around 4,800 rupees per lot on the BSE and the NSE, that is, and the stock is constantly moving up higher. You can see 190 rupees kind of a move on the stock. Remember, the stock's issue price was 570 rupees and it's got listed at 755, inching higher now at 760 odd rupees. A strong uptick on this one. So with that, ladies and gentlemen, many thanks, Mr. Jani, for being with us, and we'll wrap up this very special edition in the morning trade. But do stay tuned throughout the trading session with us, because we will be coming up with very, very exciting conversations around earnings outlook, around gold prices, and of course on the new IPO and the listing space as to what can you be really expecting. So the action will continue even beyond this. So stay tuned, and don't forget to like and subscribe to our channel.
The facelifted Mercedes GLS 450. We've been driving this for a couple of days. You saw me